Right. Hang on there, guys. We're going to be starting here pretty quick here in about 8 minutes. All right, we're going to be starting here in about 4 minutes.
You live? You live, Ryan?
Yep, I'm here.
All right, I got it working. Hallelujah.
All right.
So where's your? I just see your face there. When do you actually see your real mug?
Oh, in a minute here.
Okay. So how much did it cost to get this set up?
We're using the free version right now.
Oh, is it going to be only like a 30-minute version then?
We'll see what happens. If it shuts off, then we'll get back on again.
Okay, I was just curious because we might be able to use this for some other uses here.
I agree.
You know, it's kind of exciting.
Did you say something? I just left.
Oh, I said this might be useful for other things later on.
Oh, I agree.
You know, just kind of getting a feel for it. No, Andrew's been using it quite a bit. Let me see participants. It looks like Lisa Lowe and Vincent is there. I see. Who's Vincent? Vincent Reyes. Was he at the last meeting?
No, I think there's some other people that haven't been on before. Why don't you ask him? Introduce yourself. Be friendly. So some online social etiquette.
Good. I'm not sure how to do it. You there, Vincent? Vincent? Hello, Vincent. He doesn't have a mic on.
Oh, it's all right. You can listen.
Oh. I don't know. What happens when I click on him? Does nothing. See, Lisa shows up. No. She's got like a telephone that's crossed out. I'm not sure what that means. We're the only two guys with mics on.
That's all good. I can unmute her like this. Hey, what's up, Lisa?
Hey, what's going on? Can you hear me now?
Yeah, now I can.
Yeah, we can hear you. Oh, you're on it. Why is it on the telephone thing? That's weird.
Hey, you can call in.
Oh, I
I'm
see.
called in on my phone and I'm logged in on my laptop.
Overachiever.
Okay. That's got it's kind of weird buzzy noise.
All right, I'm gonna mute everybody. We're gonna get ready to begin.
All right.
T minus 10, 9. No, I'm just kidding.
There we go.
Got
Let's
about a
see.
minute though.
Annie Schumacher.
So I don't know if Vincent can hear me or not, but I think Vincent Reyes is the same person who's Vince R, who emailed me earlier today. And he asked a bunch of questions, so I'm gonna answer those questions here. In fact, I got another person I need to answer their questions as well. Someone from Facebook.
Wow.
So we'll do some of that. This is being recorded, so those of you that want to have access to, we'll post a recording in the Bootstrap REI group, and I'll also put it on YouTube as well. All right, everybody, welcome, welcome, welcome. It's 6:30. We'll go ahead and begin. I am Ryan Nickel. I am the host of this particular meetup. This is going to be called State of the Industry. So we're going to go over some of the states of the industry and then answer some of your questions. And then I'll answer some of the questions that were sent in to me as well that wanted to get answered. So see what I can do here. I got to be constantly monitoring this to make sure that there's, because I have like a waiting room for them to come in.
Oh, maybe it limits it to 5 people, Ryan.
No, I have up to 100.
Oh, okay. Because I only see 5 people on.
Well, that's fine. That's just how we roll. So
Well,
they'll catch the replay.
All right.
All right, here I am, Ryan Nickel.
Hey, there you go.
One of my spare bedrooms. So let's go ahead with this, and I am going to share my screen, and I'm going to show you some information here. So I want to give you guys a state of the industry. Of course. That's the one I want right there. Boom. All right, so can you guys all see this right here?
Yep.
So this is the U.S. initial jobless claims. So what I want to do is I want to give you an overview of what's happened with the whole coronavirus, the sheltering in place, and how that's affected real estate in general, and then also the overall broad economy. Can you guys, do you see only the screen, or do you see my little me as well talking?
We see the little photo of you.
Oh, you see me like this?
Yeah, you're waving, and you're like,
all right, cool. I have no idea. So this is my first time doing this.
Yeah, you're like a 3/4 inch by an inch.
There we are. So this is the jobless claim since they were tracking it since I believe 65 is when they started, and you can see that it was nothing. For example, like, you know, during the 80s we had some high unemployment and stuff like that, as far as millions of people. We put this into perspective. 2008, the most recent economic challenging times that we have lived in. This is where we were at. Not even like a little bit over 500,000 people were unemployed. And check this out. We have, this is as of, I believe this was of March. This is the data for March. And so I've heard some numbers. I could not find the statistics on it, but I've heard numbers that this is a multiple, this is 10 million more now. So this is almost 7 million. I heard that we are almost at 17 million unemployed. And that's absolutely staggering to think. So not only that, so we have the immediate influx of unemployment, which, by the way, I don't know if you know this or not, but unemployment is, I guess, people waiting. Let me add them in here. There we go. So unemployment is actually a state thing. It is controlled, or the funds come from the state. So states now, there's I should have had this graph. I didn't see it. I didn't think to do it. But there's actually a number of weeks, and you can look this up. There's a graph that shows a number of weeks that each state has to fund its unemployment claims before it becomes bankrupt or insolvent. California had 4 weeks of funds before it becomes completely insolvent as a state. It was really, really eye-opening to see. Whether that's because we've depleted our funds elsewhere, or because just the sheer number of individuals that have filed for unemployment. I don't know the correlation there. All I do know is that based on what they know, it's 4 weeks before California becomes insolvent. So this whole open up the economy thing is a real deal, because if your state goes insolvent, then what else becomes an issue that you're not able to get access to? So this hit us, the jobless claim, and then in March, most people had paid their rent in March, but when April hit, 31% of renters did not make their rent. And this comes from the National Multifamily Housing Council. And I have renters that didn't pay. You're going to, as you have a portfolio of rental properties, you're going to have individuals that just aren't going to pay. It's just, you roll the dice. That's just what happens. It's a statistics. It's just numbers. But I have an unusually, for me, an unusually high number of people. Actually, I shouldn't say high. But I do have individuals that, because of the coronavirus, got laid off, or their income source ceased to exist, and they were not able to make rent. I did have a couple of families that say, hey, we have enough money to make April's rent, but we cannot make May's. And so this number that we're seeing here, as far as 31% of renters that didn't make rent this month, I anticipate that number to actually be higher in May, just because there are more families that, they had a partial month of earning wages in March that they had to draw upon. Here in April, they don't have anything. And so I'm expecting that to be even higher, which leads me to this next problem here. This is the percentage of servicing portfolio volume and forbearance. It's basically what it is how many people have raised their hand and said, I need mortgage help. I cannot make my mortgage payment. And so you can see here, Fannie Mae and Freddie Mac, these two combined are almost at 6%. It's staggering to think about that these mortgage companies, these federally insured mortgages, that almost 6% of the economy here has not been making a mortgage payment. And then on top of that, I don't have the FHA slide, but the FHAs, they're at almost 8%. It's like 7.6% of all FHA loans opted to have a forbearance of some sort or another in the month of April. So not only are we seeing that the renters aren't paying, well, and I don't know if there's going to be definitely some correlation between renters not paying and then, landlords unable to make their mortgage payment. But also on top of that, you have just regular old homeowners that aren't able to make their mortgage payments as well. So that's exacerbated the problem. And, not to get too technical on what happens here, but if you have a portfolio lender that's unable to meet its obligations, and they're not able to lend. And if they're not able to lend, then new home loans aren't able to get done. And for us as investors, we are relying on the homeowner to be able to get qualified to buy a loan, to get a loan to buy our houses. And so this is why this is important to you guys. It's also important to me because I do a lot of subject to purchases. I do a lot of buying properties, taking over existing debt. And I'm going to share an example of one of the challenges that I'm having right now today with my type of buying these properties and turn around and selling them on seller finance, mainly because of this factor right here. Not because people aren't paying, but because of what renters are thinking is owed to them. I don't know if you have seen or not, but I've seen multiple pictures here in California that down in Los Angeles, it says, don't pay rent, rent strike, don't pay it, won't pay it. I'm like, don't pay it, won't pay it. Where does this come from? This entitlement. And then there's an assembly bill that's in the state right now that's proposing to take all landlords across the board. At least that's the way I understand it, is a 25% hit in rent, that they're going to reduce rent by 25%. So there's a lot of different things happening that's affecting our pocketbook as investors. And I'm going to share with you tonight some of the things that I'm doing to maneuver, and then, we'll also open it up to you guys as well to see what you guys are doing to get around some of this stuff. So right here, this one, I lost the actual title. You can see it's right here, the oil price crash. Anyone know why the oil closed at 31.5% lower yesterday than it ever had? Here's break even right here, 0. We just went completely down. Like we just collapsed. Like oil markets collapsed. Anyone have an idea? I'm not gonna mute you all. Anyone want to take a stab at that?
Less people out on the road.
What was that?
There's less people out on the road, not high demand for it.
Exactly. That's one of the main factors. Is there's absolutely not a lot of demand. There's actually a surplus out there, and so that's one of the things as well. But not only that is, so we're talking about crude oil, like raw barrels. I'm going to mute you all. There we go. So what happens with crude oil is you have these barrels that are produced, and then it goes to the refineries, and it's in almost everything that you can think about. It's in rubbers, it's in plastic, it's in manufacturing, it's in the machines, it's in lubrications, it's in everything. And so as the economy completely shut down, the demand for this oil also went down. And not to mention, gasoline, but also you have shipping, shipping fuel, you have airline fuel, you have a lot of stuff that is also not being, used right now. And so that also caused this to crash. Now, what's interesting is, we're still producing oil on a monthly basis. This was actually a futures. This was the futures oil. So if you're, basically what a future is you project out 1 year, like, hey, I have it's like an option. It's like a lease with an option to purchase, if you understand that creative financing strategy. So you're optioning to buy this oil in the future. And what happened is all these futures came due yesterday or the day before that on Sunday on the 19th, and there's no demand for this oil. And so what happened is they took this hit. They had to actually, the producers had to take this oil back, and because no one's going to buy it, and they had taken it at such a hit that people were actually paying to get rid of their contracts, their futures. And then what's happening now is because no one's buying it, because in the future what happens is, let's say I opt to buy oil at $100 a barrel, and come in a year, and I have no idea, I'm not going to use the oil. I don't have a refinery, but I'm going to buy it because I know I can make money on it. And so let's say it comes up and the oil's gone up to, $1.50 a barrel. Well, I just made $50 per barrel on my contract, and I'm going to go out and I'm going to sell it to somebody because I can sell it at a discount. I can sell it for, if it's 150, I can sell it for 140 or whatever. But what happens is when it goes down, I got to take that hit. But when it goes down this far, a lot of companies are taking a bath. But because there's no demand for it, that's what dropped it down so far. And so this is telling us a lot about what's happening in the economy. So you have Wall Street that's out there with your tech companies, that's out there with all of these, these startups and things like that. And then you also have Main Street. And Main Street, your manufacturers, your self-employment, your real estate investors, basically the guys that are on Main Street, the face of America. And we're not out there producing, we're not out there consuming. And as a result, the demand for the oil has gone down tremendously. So it shows you basically the standstill of where we're at as an economy. So I want to, paint the picture overall to show you, hey, this is what's happening in the economy. This is what's going on right now. And this is how it's going to affect you as real estate investors and as you're out there buying and selling. Now, I'm not telling you like, hey, the world's over. People are no longer buying real estate, because that's not true. You can just look out your front door and you can see that there are still houses on the market. They're still being sold. There's still people getting loans, and that's all still happening. But as we continue to progress down this road, if economies do not start to open back up, if this infrastructure remains dormant like it has been, the rebound is going to be a lot longer and a lot more challenging than at least me personally previously believed. I thought that we'd shut it down and then bounce right back up, and we'd have what's called a V. We do straight down, straight back up. Whereas now we're going to have kind of like, you heard about the whole flattening the curve thing. Well, that's the opposite of that. It's a U. It's like, okay, we're gonna go through this several months before we come back out of it. And so that's the challenge that we're going to be facing here with going forward. So what I'm gonna do is let me see how I do this. Anyone have any? There you go. Any questions? Or actually, I'm gonna mute everyone. If you have a question, unmute yourself and just go ahead and ask, any questions on this particular segment of what we talked about, or any clarification if needed or wanted.
You can also enable chat.
Chat. What a fantastic idea.
Why is my name Randy Just? I just want to know that.
Who is that? I have two Randys Just.
I don't know how that happened.
Use my login. I think.
Oh, Randy, did you give out your password to somebody, your login?
Yeah, I did.
Ah, there you go.
That's all right. My name's Annie, by the way. I just jumped on.
Welcome, Annie.
So can you sum up what you just said before I jumped on in one sentence?
The economy is hurting.
You think
and
so, Ryan?
We have the statistics to show it. We have unemployment, we have renters not paying, we have forbearance, and then we have oil that's crashed. And so our economy is really hurting right now, and it's also going to continue to affect the housing market as individuals are not able to work, they're not able to get loans, they're not able to buy houses.
What does forbearance mean?
So forbearance is when you have you're choosing not to make a payment, but it's accumulating over time, and then you're going to, in a 3 or 4 month period, pay it all back. So basically the lender says, I'm agreeing not to pay, right? Or I'm agreeing not to collect right now with no adverse effects on your credit.
But you still owe all of that.
You still owe it all. It's not forgiven, it's a forbearance, which means it's forbearing to collect.
Okay, got it. Thank you.
Yeah, you're very welcome. Lisa, you unmuted. Do you have a question? I didn't hear you.
Hold on, I'm working on my speakers. Can you open up chat?
Yeah, I should be able to. Let me get back over to Zoom and see where my chat's at. There we go. Is it not opened?
It says it's disabled.
Oh, you know what? I did do that. How do I? I might not be able to open it up.
So this is the oil price crash over just like the last month almost, or 2 months.
Yeah,
yesterday.
but the big crash was yesterday.
Yeah, I heard it was like down to like 0 or
Negative, like almost
futures
negative
are-
$40.
Futures are in the negative. That's what it is. Yeah.
Yeah, the
Like
futures were
negative.
negative.
Well, hey, Brian.
Yeah, Randy.
Yeah, some of the oil thing, you might give you were saying about this before, maybe you might want to give a little history with Trump, because this was kind of happening before even the virus, as far as oil prices going down because of the dumping of Russia and so forth on the market, correct?
Mhm.
Yeah, so you have OPEC, and I don't want to have this is a good economic conversation, not so much a political one, but yeah, with OPEC, he's dismantling the monopoly that OPEC had, and so he's now created what's called OPEC Plus, which includes Mexico and Russia and the United States and a few other players, and but it's basically he was trying to level the playing field, but it also goes deeper than that. Our currency is tied to the petrodollar, so that money, as oil drops and tanks, our currency becomes worthless because we're the reserve currency. So this is the whole thing. That this is a huge macroeconomic thing. What happens though is being a reserve currency means that if I want to buy oil, I have to go and take my yuan and I have to convert it to dollars, and that conversion of dollars is what stabilizes the dollar. And then you buy oil in dollars. But what happens now is that you've tanked the oil market. Our dollar is worthless because now no one, they're not going to buy oil because they don't need it. There's a glut of it out in the marketplace. And 2, they're not converting to $2 to buy. And so that hurts our dollar, which means that we have to have something else. There needs to be something else that can withstand these kinds of market fluctuations, that has proven the test of time, that can sustain its value. There's some arguments that we need to go back to what's called the gold standard. Whether or not that happens or how that happens is still yet to be seen. But as the petrodollar is tanked, and if it remains that way, then our purchasing power as a dollar, we're going to see some major inflationary concerns, and so, or even deflationary actually. So that's the real issue.
So because I've been kind of following up with this too, but what you were saying, Randy, was before this, and Ryan, before this Corona thing really took off, that we were trying to not be so dependent, I guess, on OPEC, or trying to be more.
We are a net exporter right now, correct. So we actually produce more oil than we actually take in. So we are energy independent, if you will.
Yeah. But now it's like, it's not really helping us at this point in time, except for the fact that we have filled up our oil reserves up to the brink, right?
Yeah, we're reserved. In fact, we're actually parking tankers out into the Gulf, just sitting there full of oil because we have nowhere to put them.
Yeah, I know. I know of someone who owns a bunch of those tankers. He's getting paid big money to keep that oil in there.
So I'm looking at chats. It looks like I'd have to stop this in order to do it. So I think we can just continue to go at the way that we're doing.
My thoughts are like, I always thought we never should have gone off the gold standard, but honestly, real estate, if we don't get back to the gold standard, I think real estate is really going to be where people are going to go to secure their wealth, or to,
It's so interesting you said that. I just posted this today in Facebook. We were talking about that, if we have a deflationary event, what are you going to do to prop up your money? So, gold and silver, if you're not buying precious metals, or if you haven't already bought precious metals, good luck trying to get a hold of them. There is a 9.5, at least the major area here in Northern California, the guy that I buy my metals from, 9.5 week wait. And there's a premium to buy it because they don't know what the price is going to be. So you're buying way above what the price should be today. But again, it's because you can't get a hold of it. So what's the next thing? If you can't get a hold of gold and you can't get a hold of silver, what's the next thing that's going to, maintain its value?
buy a mine.
buy a mine. Well, it's land. That's the same thing. You know, land. It has mineral rights. It has water rights. It has, you know, the right to build on it and to improve that property. So, I mean, land's the next best thing. And so that's, I mean, that's where I'm placing my bet. So it brings us into what's happening now with the economy. Like, what are you guys seeing? I mean, out there, you guys are either just starting to invest, or you've been investing for a while, or maybe you're not even investing, but you're on the retail side. You're buying and you're selling. Let's hear some of the things that are going on out there. Just go ahead and unmute yourself if you want to chat. And I, you know, dang it, I disabled my chat because I teach some students. Ah, there we go. Bam. You guys see that?
Oh, I
You
see.
should be able to use chat now, guys. Yes, perfect, Lisa. All right, so we'll just do that. So shall we go on to the next segment, or do you guys want to stay here? Any questions?
Well, I wanted to share something with you. I just actually, the reason I was late for this was because I was on a land banking webinar. Anyways, it was very, very interesting. And maybe sometime I can share that with you, but it's a way people can own land, like in a 401k, or they can buy it with cash, but they, you know, they don't have to. They can come in with 40,000 or more. Anyways, it's a very interesting concept.
Wow, that's cool.
Yeah, they
Randy,
recorded that too, by the way. I'll share that with Randy and you after this is over, and anybody else who wants to see it.
Awesome, cool. Yes, I've heard that folks that weren't far into their home purchase are being halted to buy from a traditional model. Yeah, you know, Lisa, some people are still buying in the traditional way. Some people that that were in the process, got disqualified you know, they weren't able to qualify because they either lost their employment, or the lender all of a sudden said, oh, we want more reserves, we want a better FICO score, we want to have a bigger down payment. I mean, we've all seen the headline from Chase Mortgage that said we want a 700 FICO score and 20% down. And by the way, no HELOCs. We're not doing any more lending on that. You know, that was a very drastic move on their part. But you know, there are some truths to this, that maybe some of the buyers were not as qualified as they needed to be to purchase, and so that's definitely an issue. But I think in the end, it's only going to make them a better buyer in the long run. Casey Merch says, I am new and just getting started. I see land prices ranging from all over the place. I'll give my 2 cents on this one. I think land is the last thing you want to be buying right now. It does not retain its value. It's just, if it's just bare land, just like, you know, bare vacant land, you're going to have to improve it. You're going to have to do a lot to it in order to, and that's going to take money and stuff like that. I own some land. I own some bare land that I couldn't sell it for anything that would make me, you know, be worth my while. So bare land by itself, yeah, you're going to see prices everywhere, especially the further out you get from civilization, the more costly it was going to be to improve that property, because now you're talking about, you're not going to be able to tap into city water or city sewer. You're going to have to dig your own well. You're going to have to put in the septic tank. You're going to have to find electricity wherever it may be and run that line all the way to your property. So land itself, I think, is a very costly venture, and unless you have a strategic use for it, I'd stay away from it. But that's my personal opinion.
So just, I want to tell you that the land that the company that I'm actually with, they only buy pre-developed land that's in the path of growth. So there's
Perfect. And that's a smart way. That's a very strategic approach to doing that, because you're only it's just a matter of time when that path of growth is going to hit where you're at to be able to cash out.
Yeah, and then the area is just like the fastest growing area, and you know, the only place that LA County can actually expand to, and there's a lot going on in that area. So yeah, otherwise I don't think it is the best investment.
Yes. Lisa says, exactly right. That's what I was talking about. Proof of income has become a huge issue. Yes, it has. In fact, there's something called non-QM loans, which are these non-quality mortgages. What's happening is or non-qualifying mortgages, they used to have what's called a bank statement program. They take 12 months of your bank statements. If you're like a self-employed individual, rather than taking your tax returns, they take your bank statements. Well, those are gone right now. I had a call today with Matt, the mortgage guy, and Matt was telling me that those will probably be coming back here, but not too soon, but they will be coming back because there was a huge need that they fulfilled. But right now, no. You gotta have proof of income. You gotta have documentable income. But this does not apply to mortgage lending. Think about the individuals that also need to rent a house. Landlords are requiring 3 times proof of 3 times the monthly rent. And so yeah, proof of income is a huge issue across the board, not just in lending, but also in renting. Jamie's here. Jamie's in wholesale. That's fantastic. That's where I got my start. Still do some wholesaling. Can someone explain the wholesale further? That's from Casey. So a wholesale is where you go and you buy a property at a discount, and then you turn around and you sell it at a medium price to someone else that's going to go and they're going to rehab it. They're going to fix it up. So you're going to get it for a low price and you're going to sell it for a medium price, and the rehabber is going to fix it and sell it for a higher price. That's basically what it is. So you're just trying to find a property at a low enough value that you can get it under contract and then turn around and sell that contract to someone that is going to build it. That's basically what wholesaling is. The other question here says, are land trusts recognized in California? Yes, they are. My attorney did not know anything about it. He said trusts are not needed and LLC is good enough. Well, it depends, Vincent, on what you're actually needing, your purpose. There are 2 different purposes. An LLC is a business entity. It's for you to have some liability protection. A trust doesn't give you liability protection. It's more of asset protection and anonymity as well, because you're not able to. The trust is the owner of the property, not you. So they can do the same thing if structured as far as asset protection goes. You're not protecting your assets. You're just out of the public view. But trust can be pierced just like an LLC can be pierced. So good for you for going to your attorney and asking that question. Let's see what other questions we have here. Couldn't an umbrella policy provide enough protection? So Lisa, have you tried to get an umbrella policy? What I have found is that umbrella policies are usually for licensed individuals. So for example, if I'm not a licensed real estate agent, it's going to be very difficult for me to get an umbrella policy because those are usually like an errors and omissions type of thing. Overall, that's it. But also an umbrella policy, you have to prove that that you weren't liable in any way. So it's good to have, but it doesn't protect you necessarily. So your insurance carrier, I mean, they're in the job of not paying stuff out. So they can basically say, hey, this was your fault. Sorry, take the hit. And then your assets are all exposed that way. How do I hold my properties? They're all in trust. I have one, 2 million. Fantastic. Lisa, I think you ran over my foot last time we were together, and I still have some issues. Can I have your can I have your insurance provider's information, please? All right, so I'm gonna go on to the next section here, guys. Challenge accepted. So Vincent Reyes, you guys can't see his questions. He's asking me privately. He's asking if I close with an attorney or a title company. In attorney states, in judicial states, I close with an attorney. In non-judicial states, like here in California, I close with a title company if I'm taking them subject to. That would be my recommendation. If you're just getting started and you're taking a property subject to, depends on your state you're going to be in, close with a closing attorney or close with a title company. All right, so fantastic. I'm in Kelly as well. Let me show you guys this. Let me pull this up here. This is actually, so I think Vince, you wrote me some questions. I'm just going to read this question out loud. You asked 3 questions. You said, do we need a lawyer to get these deals? I think I just answered that. No, you don't need a lawyer necessarily. You may need a lawyer to do the paperwork for you. Yeah, for sure. If you don't have someone that has the paperwork, then yeah, a lawyer would be a great place. Make sure it's a real estate attorney that knows how to do creative financing, because not all attorneys know how to do that. Do we need to put properties in a land trust for these deals? No, you don't have to do that, but you run the risk of the lender calling the mortgage due. There's a due on sale clause that you're open to, you're liable. Whether you have it in your name or an LLC, it's the same way. It's still due because the title has changed or ownership has changed. So you run the risk there. What do you think about buying properties at tax lien auctions and then turn them into lease options? It's a great strategy. You know, there's some pros and cons with tax lien sales, but it's definitely a great way to go ahead and get a property at a great discount. So, you know, just be careful that you do your research on all the liens. Make sure that you know the property you're going after is a decent property. All right. And so let me show you this here. Let me see if I can pull this up. Oh, there it is. Actually. So I just pulled up Facebook and the money.yahoo.com, housing expert, whoever the housing expert is. Home sales could fall 30 to 40% in the next months. So you're going to see a lot of fear out there in the market, but it's a great time for you guys to go out there and to buy. But you also have to be smart with your buying. And I'm going to show you something that is important for you guys to pay attention to. So when I buy my properties, where is it at? Here it is. Okay, perfect. Let me share this with you. I buy my properties in a creative way called subject to. So I'm buying these properties and they are, the debt is in somebody else's name. Vincent, can I purchase the documents from you? Yes, you can go through my training and you get all that information there. It trains you step by step, everything you need to do. When to use it, how to use it, all of that. So, okay, I showed you guys these things here. This is the whole reason. So a lot of you guys come to my training because you want to learn about doing creative financing, doing seller finance deals, taking a property subject to. Here's the challenge right now that we're facing. And so as an investor, I've actually taken a step back from buying properties subject to, and I've done it for 2 reasons. One, I believe a lot of the properties out there are overpriced. Just look at the houses that, just pull up an MLS or pull up realtor.com and look at, there's a little checkbox you can click and it shows prices reduced only. And you'll see that there's a ton of properties that are showing the prices are being reduced. Now, some of that is because of the acute trauma that the economy is going after. We have landlords that are, they're not getting their rents, and maybe they're paycheck to paycheck. It's unfortunate to think that, some landlords are living, hand to mouth. Great opportunity though. Great opportunity to pick up some landlords that are just, in a pinch, and they really just need to just, liquidate their inventory. But also you have these mortgage forbearances as well. And so, while individuals are not making their mortgage payment, they know down the road that they're not going to be able to make those mortgage payments. That forbearance is that day of reckoning is going to happen. And either they're going to be, caught holding the bag because they don't have the funds to do that, or the lender's going to come and they're going to foreclose on them. So some individuals have the houses on the market and they're just dropping the prices. You can see some of these houses, they're dropping the prices weekly. Typically in the past, you might see a price every 30 or 45 days. Now we're seeing them every 7 days on certain houses. There was one house in particular that the MLS notes, this was so funny. The actual MLS notes for the property says that the buyer lost their job. Excuse me, not the buyer. The seller lost their job due to COVID-19. I mean, like, if that was not I don't know if it's a violation of the fiduciary responsibility or not, but if that's just not a red flag to anyone looking to buy a house, like, hey, this guy lost his job, come make any offer. He's willing to let it go. I think there's some deals that are out there. But here's my point, and this has always been my point. When buying a property that you're inheriting the debt, whether you're taking on a lease with an option to purchase, you're agreeing to someone else's imposed payment, or you're taking over the property's debt on a subject to purchase. For those of you that don't know what a subject to is, you're buying this property subject to that existing debt. So you're basically just taking over those payments. And here's the thing, and I've passed on a lot of deals in the past. I've just walked away from them because the payments were too high. And I want to say this with all sincerity, 9 times out of 10, interest rate and the actual sales price of the house really don't matter to the buyer. What matters to the buyer is, what is the monthly payment? Can they afford that monthly payment? Yes, Randy, go ahead and get it all set up, and I'll give you the opportunity to share that. And so people buy monthly payments. I mean, when you go and you buy a car, they go, what can you afford monthly? They don't even care about the sales price. That's the last thing. You're like, well, I can afford this payment. I can buy that car. And that's really what happens when I'm selling my properties on creative financing. Now I'm going to show you 2 different properties here. Let me see if I can find the other one. And you're going to see exactly what I am talking about. And this is going to apply to all of you guys if you're going to be doing skinny deals. Serious lag on my computer here, but that's all right. It's not going to show me. Dang it. Oh, yes, it will. There we go. Perfect. Okay. So, all right. Randy, do you have that now? Before I go into this one?
Yeah, hold on. I think I clicked on what, share content?
I think so, yeah. I'm going to stop sharing, and I'm going to let you share.
See what happens here.
All right, and I'm going to show this. This is the
Let's
case.
see what goes up.
And by the way, I just want to mention, Randy and I are buying. We're buying. We're out there buying and selling still, so things are still happening. It's got a little bit more fierce, the competition. You have some aggressive investors that are going to want to challenge your prices, and force you to bid against them. And we actually lost out on one yesterday. It was kind of a bummer, but that's just how it goes.
I tried to share content. And I clicked on screen. Unless I do website URL, see what happens here. Huh. Yeah, I thought I had
I just changed you to the host, Randy.
What's that?
I said I just changed you to the host, so you should be able to share.
Well, click on screen. Should show what I have on the screen.
Now what you need to do is you need to go to, on the very bottom, there's a a green arrow that says share screen.
Let me take a look here. Unfortunately, I'm not seeing that on my iPad.
Oh, you're on your iPad, that's why. All right, you just lost host privileges.
Yeah, because it says screen recording, Zoom, Messenger, join me, camera roll.
Oh, that's all right. You're just going to show. I mean, I could very easily do this on Realtor as well.
Well, let me do it. I can give the numbers.
All right.
Just real fast. Just so folks know that there actually is activity out there, that it's not a dead market. Because right now we have actually 10 listings are on the market. Okay, that was in the last 24-hour period in the greater Marysville, Yuba City area. We had 10 listings come on the market. We had one property that went back on the market. we've had one price increase, and strangely, we had 0 price reductions in the last 24 hours, which I find kind of interesting. We did have 5 pendings, which means there's 5 offers that were accepted. There were 7 properties that actually were sold within the last 24 hours. We have 2 expireds and we have 2 inactives. So there's definitely still activity, even though, Ryan, I don't know if you recall when we were looking last week, the solds were in like the 10 to 12 range. So that actually dropped a little bit over the last 24 hours.
Well, there you go.
So there might, and it could be just that 24 hours, or is this a trend? I don't know right now. So we'd have to take all the data and put that together and follow the graph and see what's happened. Because I think that's important that folks know that there's still people, just as you said, we're buying properties right now. There's definitely activity out there. So
let me do this. Thanks, Randy. Appreciate that. Let me share my screen with you all. This one. Okay, so you guys, you may not be able to see it. I don't know if it's going to be too small or not. But what I want to show you is all of these down arrows. These are all the properties with prices down. So it tells me there's 46 homes that are price reduced. So if I go into here and I go existing homes on the market, there's 306 homes on the market in this view, in this window here. This is Yuba City, Marysville, Linda, Olivehurst area. Looks like a part of Plumas Lakes. But when I go to existing homes, price reduced, we go from 306 to 45 homes. So more than 10% of the market is in some kind of price reduction. Now, I don't know what that is as far as like, I couldn't tell you what that is before this. I don't know. But all I'm doing is I'm looking at this because this is where my market of opportunity is if I were working only on the MLS, these are the houses that I'd be going after. I'd be looking at, okay, who's selling and why? I mean, like this one here for 30 grand, like what is that? It's a mobile home. Now, if I'm buying mobile homes, I can jump into that. So, but I don't want to belabor the point. I want to show you something else. But before I do that, it looks like we have some more questions in chat. Where did my chat bar go? Oh, I lost it. Randy, can you give me host capabilities back so I can see the chat?
Where would I set you up for host capabilities?
I believe if you click on my window, on my picture,
Okay.
it should say make host.
I see participants. I see Ryan Nickel.
Yeah.
And I see make host. There you are.
Awesome. Thank you. Perfect.
Is it showing up?
Yes. All right. So chat. Can I clarify subject to purchase further? Yeah, I sure can. So a subject to purchase basically is when you are buying the debt from the individual. You're not assuming their mortgage. You're taking over their payments. You're buying that debt. And so the mortgage will stay in the name of that person, but you are the one on title. So ownership goes with title, not debt. So you can own title to a property and the debt can be in somebody else's name. Now you'd be obligated to make those debt payments, or else that lender would foreclose on you. Then you'd lose ownership because they would foreclose and take your title away. So that's what subject to purchase actually is. It's a very creative way to not qualify for a mortgage, but yet still have a mortgage securing that property. And basically you're leveraging someone else's good credit and equity and money in that regard. So let me go ahead now and share this other thing with you guys. All right. So Facebook Marketplace. I'm gonna share with you 2 houses. 2 deals, one that I recently closed on and one that is extremely challenging. And you're going to find out very soon why. So I have this house right here. This is in, you guys all can see this, right?
Yes.
All right. Thanks, Vincent. Elisa, but you're not really focusing on subject 2 right now. Is that because they're going to be more inventory down the road and it's a better to wait? I'm going to tell you why I'm not focusing on it right now. Actually, I am focusing on it, but I'm focusing on it in a different way. So in the past, I used to go after just about anything because I always believed that, hey, people are going to be willing to buy a premium. You know, they'll pay a little bit more for a to own a house, but it has to be within reason. Because remember, going back to, they're buying payments. They're buying monthly payments. Let me show you this house right here. So this is a house that we sold. Let me show you this. This is in Oroville, and this is a Riverview Terrace. Cute home. This is the back of the house. Little patio area. This is downstairs. This is the upstairs. This is the bathroom. Just, you know, cool home. Kind of a small galley kitchen here, but quaint. You know, beautiful hardwood floors. This is the house. So here's the thing here. Fair market rent for this house was $1,525, and fair market price for this house is about $199. As you see here, we sold it for $22,500. We sold it for $22,500, and they came in with 10% down. So they came in with $22,500, and they agreed to pay that $1,525 a month. Now, the reason why that $1,525 a month is crucial is our mortgage payment on this is $987 roughly. So there's a good spread there, a really, really healthy spread. And, you know, almost $550 a month spread there, plus the down payment. And what is owed on this property is roughly right around like a $150, like 150,000. So a lot of room there, lot of room. And if needed, we could have come down on that monthly payment, but we didn't. We found the right person, the right guy. So I would do this deal, Lisa, all day long. I would take this property subject to as it was and sell it as you saw. Beautiful property. Now let me show you. It's twin. This is a Yuba City property. On the market right now for $259,900. $1,800 a month payment. Now this is the challenge here. Fair market rent in this area is roughly $1,500 is probably the high end of this particular area. This house has some deficiencies. Okay, let me go back here. This house also has some deficiencies. I mean, you can see this right here. This is not for an aged person. You got a lot of stairs you have to climb. There was no garage. It's a 3-bedroom, 2-bath technically, but it's a 2-bedroom, 1-bath upstairs, and then all the way downstairs it's another one. It's a 1-bedroom, 1-bath downstairs. So that's where the other 1-bath. So come into place. It's only also 1,071 square feet. So there are some deficiencies, but again, excuse me, the price overcame the deficiencies because $1,525 is fair market rent. You're not asking them for anything more. Going to this one here, we're asking them for $300 above fair market price, fair market rent. Plus we're asking for 10% down. This house, is it worth the $259,900? We believe it's probably about a $270 house, but again, there's no garage. It's on a busy street. It's a house that was built in 1935, so there are some architect. There's basically it's a dysfunctional floor plan, to say it bluntly, but it's an outdated floor plan as well. Back then, old farmhouses just kind of put everything together. I can't say that haphazardly, but you'll see here. So this is a house that it's a nice done. It was done nicely. The upgrades are nice. It's it's a very charming home. You can see here that here's the kitchen. But the problem here is the monthly payment. The monthly payment is what is stifling this particular property. And I've shown this property, gosh, I want to say at least 27 6 or 7 times. I showed it, I actually showed it today, believe it or not. And the reason why they didn't like it was they had young kids, and these stairs right here, there we go, were too steep. She's like, oh, my kids are these are too steep for my kids, sorry. And, you know, believe it or not, it doesn't look like it might be that steep. It gets really, really vertical right here. It's like almost like it goes whoop, straight up. And that was her concern. But anyway, it is what it is. You know, you're not gonna twist someone's hand, arm to buy a house. They either have to fall in love with it or they don't. But here's the problem now. So going back to your question, Lisa, with these properties. So the debt on this property, the seller's willing to take a hit. I partnered with the seller on this one. We have a joint venture agreement, and they owe, I believe, $280 is what they owe. And so you can see they're taking a hit. They're taking a $20,000 bath, but they just want to get out from underneath it. They over improved it for the area. I mean, it's a nice house, but it's definitely over improved for the neighborhood. And as a result, it's languishing. It's been sitting on the market for a very long time. Not only that, there was some debt that that was hard money that had to get rolled into private financing. And so this is privately financed right now. And the monthly payments on it is what's crushing this person at $1,800 a month. So ideally, they would just love to just get it out completely, but it was on the market for a long time, and no one was buying it. I have had a lot of interested parties, a lot that do have this money, that have $25,000 to come in and pay, but the problem that they're having is $1,800 a month in a neighborhood that doesn't justify $1,800 a month. In fact, I had an individual today, literally today. He called me yesterday. He had seen it a couple of times already. He drove up from Los Angeles to come see it. He works in LA, but he lives in Redding, and he drove on his way to see it. Like, drove all through the night and came and stopped and saw the property, and brought his wife a week later. She loves it as well. And they were coming to bring the money today, and he called me early in the morning, and he says, hey man, my wife and I just talked about it. It's just not the right time. I'm sure that what's happening in the economy with the oil futures and everything, he's in an ag business. He's in an industrial ag business. I'm sure that's scaring the crap out of him right now. And $1,800 a month payment, I guarantee you, is the biggest issue right there. I have had another individual that another guy from Lincoln who works for Rideout, but he works for Rideout for Adventist Health down in Roseville, and he's attempting to transfer to Rideout here in Marysville. And he's like, I love the house. I have the $25,000 down. Can you do $1,650 a month? And as you can see here, that's the challenge. This is the challenge going forward. And this is why I've paused. This is why I've taken a step back from pursuing these properties, because what happens now is if I go after properties that have existing debt and the monthly payment is close to fair market rent, and the government says, hey, we're going to reduce rents by 25%, and or the market by itself reduces rents because there's just, landlords are desperate to get people in there, so they drop the price because they just want to have someone paying rather than someone not paying, or a vacant property that can be vandalized. I now have a monthly obligation that makes it difficult for me to sell without going negative monthly, and I'm not going to go negative on my investments. And so this is why this is so important right now, for you to know your numbers, know your market, and also know the deals that you're getting into. So am I still doing subject to purchases? Yes, I am. Am I doing them as aggressively with not a care in the world? Absolutely not. There are properties now that I told you that I walked on. I've had, as you know, I buy nationwide. I get emails all the time asking me, hey, what about this deal? How about this deal? Or I get text messages because they found my YouTube video and they're asking me, hey, what about this deal? And I'm a lot more conservative now. And this is the reason why, because of the numbers I showed you earlier with what's happening with the economy. So can you do this? Absolutely. I just proved it to you. I mean, right here, $22,500 plus $550 a month cash flow. All day long, I will do that deal. This one, it's a challenge. Fortunately, when I partnered with this person, I don't have the monthly obligation. I said, hey, you know what? I'll bring the buyer. I'll market to find a buyer, and we'll see what happens on this one. You know, we're joint venturing on it, so that's the challenge that we're running into on this one. Will I get it sold? I believe I will. I absolutely believe that I will. It probably will be for a lesser down payment, and it'll probably be for maybe a lease with an option to purchase. That way I'm factoring in a higher, I'll be able to sell it at a higher price in the future, like a 3-year lease with an option on it, lease with an option to purchase, but I'll able to increase that monthly payment to just, you know, or maintain that 1,800 with the future payday. So that's what's going on right now, guys. That's exactly, you know, what's happening in my market. And what I'm currently doing with, I wish I had brighter lights, but I don't. So I don't know, this will probably shed some light on the situation. There we go. No pun intended. So let's go ahead and go to the questions here. All right. So is this a subject to deal? My knees hurt looking at it. Did you hold open houses? No open houses, not with the Corona thing right now. So absolutely no open houses. This one, if I were to buy it, I would have bought it as a sub to, but because I partnered on it, I tell you what, this one was this was private money. They acquired it through private financing. This one is a sub to. Yes, this one right here is a sub to deal. Yes, I joint ventured with the investor. In fact, Vincent, both of these houses are owned by the same individual, and they're also my students. They came through my course, they came through my training, they understand how to do these deals. Husband and wife team, lovely people, just salt of the earth. Husband is having some health challenges, and the wife said, Ryan, would you please partner with me on this one? I know I can do it myself, but with my husband's health challenges right now, I would love to just partner with you and just get them done. And this one right here, I think I had this one on the market for maybe a week, most. This one here, unfortunately, has been on the market for a lot longer. I think I'm probably pushing about a month here. But again, I know the challenges that we're facing is the monthly payment challenge. I don't know how to say it. Is it Yon Gomez? Yes. Flipping right now? No. We do. I don't know. Randy, do you want to answer that? Are we flipping right now?
Geez, flipping. Yeah, but sort of. Kind of. We have some items in inventory. I think we're going to do okay with them. It's just more issues with permits, PG&E.
Yeah, we're stuck. The economy shut down. We can't get permits. So, you know, the contractors, the counties, they're like, hey, we're on vacation now.
Well, we can get a permit, but we can't necessarily get a.
Right.
You have to have multiple parties cooperate in what you're doing. So, but that said, Ryan, I mean, I think it's important you share a couple deals that we've had recently. One's supposed to close next Monday, which I think overall it's a win. It's not a huge win. And then also the property that we had in Sacramento. You might like a little bit, you know, with
money on is a win. So
what's that?
I said anything we make positive money on is a win.
Yeah, but I mean, some are more of a win than others. But I think the story for the property in Sacramento is a good one where every day is a variable and you use the best information you have at hand on that day. And, you know, we sold it for less than ideally what we maybe would have liked to, but just based on circumstances, we went ahead and took what we thought was a good decision.
Yeah, and we still did very well. And we had the room in there to do that. So we had a contingent buyer. What Randy's alluding to is we had a buyer that was contingent upon selling another property, and he came back to us and said, "If you drop the price 10 grand, I'll take it right now." And funny thing is we took the money, we took the hit, the $10,000 hit, and we closed on it. And has that one closed yet, Randy? His contingent offer?
It's supposed to close tomorrow.
Supposed to close. This is a month later.
He was supposed to close around the 10th, and tomorrow is the 22nd. So we
closed on it before then. We closed on it in March.
Well, we closed on it April 3rd.
Oh, okay, I'm mistaken then. So 20 days later, it's still not closed. So I mean, we took it. For me, that's $10,000 well spent.
Well, we were saying, well, is this going to close by April 10th because we have certain financial obligations on April 10th. I originally was supposed to close April 8th. And here today is the 22nd. So that's 2 weeks past its closing date. Tomorrow's the 22nd. So they're going to be 14 days past their original date.
Yeah. So you just need to look at your situation. What can you do? I mean, certain projects you can let them bleed. If you need to. I don't want to say that term lightly, but I mean you have enough room on there that you can just let them sit, and just hope that the market still is where you need it to be when you finally finish the project and take your exit.
Well, I think we would have been a little just with that 14-day wait. It'd been a little nerve-wracking, and for that matter, it still is. It still may not close tomorrow.
It's true. It might not close. Yep.
Yeah, it's looking likely, but but we have another one that the individual went from the lowest offer we had on it which would have been essentially break even at $70,000, and he quickly came up to $95,000 on it. And today they just released the contingencies, which means they're satisfied with the property. They're not asking for a price reduction or a repair.
Isn't that funny? Because then we get accused of the exact same thing yesterday.
What's that?
If you're willing to pay 99 or 95, why would you offer 70?
Yes, that's true. That did happen yesterday.
Yeah. So yesterday we offered 105 on a price, but came up to 120, and the seller said, "Well, if you're willing to pay 120, why'd you offer me 105?"
Yeah, well, we told him and said, I don't know, what you wouldn't respect this.
We're in the business of saving money. We want to get the property for as low as possible, just like he wants to get as much money as he can for it. We want to get it for as little money as possible. So I mean, it's and the game is just meeting somewhere in the middle. So
well, and then I told him, I said, well, geez, if I would have paid you 120 right away, you would have guessed and said, geez, I think I could have got more for it. So
yeah, we ended up losing the property anyway. So
well, I remember I put a curse on the property, Ryan.
Yeah, that's right. This is a good lesson for you guys. It's never done until it's done. I mean,
right. Until that
right now, stuff is falling out of escrow all of the time. Buyers getting spooked for whatever reason.
Well, case in point, we had the property in Sacramento. The original offer was $20,000 higher than the offer we finally settled with because he got spooked. He was in escrow, and
yeah, that's true.
After about 5 days, he says, they had the money. They had nearly $750,000.
Yeah, they sent over the proof of funds. Yeah.
Yeah, they had plenty of money, but they got spooked in the marketplace, an experienced person, and they bailed from the deal. So we had to take $20,000 less. And, I'm glad we did. There's no complaints about it, but,
I'm sitting better because of it.
Yeah. What's that?
I said I'm sitting better. I sleep a lot better at night because of it.
Yeah, no, it was a good takeaway amount. But lesson learned here, he apparently sold it to someone else, and we don't know how much he sold it to someone else for. So
supposedly, yeah, we don't know.
Yeah, he might have got spooked. We don't know, because he supposedly had 5 properties or 4 properties in escrow, and he didn't know what they were going to close. So he was probably hurting financially too. So I don't know. It's just hard to say.
Cool, Randy. Well, thanks for sharing, man.
All right, Ryan, give us some more of your magic.
Well, I don't know. What do we got here? We got, looks like another question from Vincent. What is the average hold time until you find a tenant buyer? Right now it's a different market, but I can tell you this, from the day I market it to the day that I pull it off the market because I have a buyer in hand, on average was between 2 to 3 days, 48 to 72 hours, just like clockwork. Home after home after home after home. This one was a week, and this one still yet to be. I think what's going to have to happen here, I mentioned already, is either settling with a lower down payment or maybe going negative monthly for the seller with a balloon payment somewhere in the future. How do I market it? Craigslist and Facebook Marketplace and some yard signs. But I can tell you the yard signs don't do as much as Facebook Marketplace and Craigslist. So we've reached the conclusion of my prepared remarks. So you guys are more than welcome to ask any other questions that you want. Casey asked the question, where am I finding buyers? For the rent to own properties, for the seller finance properties, Craigslist and Facebook Marketplace.
But our properties, the ones that we sell, Ryan, are typically networking, right?
Yeah, networking and MLS. So
Yeah.
the properties that we're wholesaling out, or that we are wholesaling, or even selling, if they're rehabbed, yeah, it's on the open market.
Yeah, we make a phone call. We know particular buyers and seasoned buyers that have bought from us before. We may not necessarily be getting top dollar for them, but at the same time, we're working with reliable closers. So.
Oh yeah, for sure, definitely.
So, which maybe you can elaborate on that, because yesterday the gentleman was trying to pitch that property to us. I don't think we were in his wheelhouse, where we're kind of like unknown quantities to him versus someone that knew.
Case in point, he's looking for a relationship. I've known him for a number of years. In fact, we've tried to partner on a few deals, but they just, nothing came to fruition. But he's out of the market. He's out of the area. We're out of the area. And I believe the buyer who he is placating to is in his market. And he's a big buyer. He does a lot of volume. And I think he's trying to get into that guy's sphere of influence. And I don't fault him for it at all. I think it's a good opportunity. That's how actually I met you, Randy. I brought you a deal, and it worked out. I brought you another one, and it worked out, and here we are. I don't know how many dozens of deals later.
But let's talk about that a little bit. That house we had over in Sacramento, I think that guy actually is a fairly decent buyer over there. He's bought a lot of properties. He came in $20,000 higher than what we sold it for, and here was a big buyer, and he bailed. So just because someone's a big buyer doesn't mean they're gonna stick around. And like this deal that we lost yesterday.
No, they have more to lose right now. In fact, there's a guy down in south of Sacramento, down in Stockton area, who's doing a lot of business, a lot of business, who's hurting really bad because in talking to him over the years, I got to find out that he needs to do at least 3 or 4 deals a month just to cover his overhead, his monthly nut. Can you imagine that? Like if everything just shut down and if you didn't have 3 deals going, you're bankrupt, you're out of business. So there's a lot to be said for, having a huge organization that, if you can't, constantly feed it, you run.
It'll consume you.
Yeah, it really was. And so he actually reached out to me. He was asking me, hey, what was I doing to find deals? Because in the past, he's never had to find deals. They were just brought to him through networking. And now he's actually starting to I got to do some marketing. And unfortunately about marketing is it's not like you just don't go out there and turn like a light switch on. You got to actually, prime the pump, and you have to it takes, 30, 60, sometimes, 90 days before you finally get that first phone call. That's like a motivated seller that says, hey, I've been getting your mailers. Yeah, let's go ahead and talk. So it's not just like an overnight thing. Now, if you're going to go knock on someone's door, you need to make sure you have the right list that's distressed, the reasoning behind that. But even then, I'm not going after foreclosures anymore. Right now, there's a moratorium, and there's no evictions happening in California. So it's like, what am I going to do? Hey, you're going to lose your house. The bank's going to kick you out. You're going to be on the street. You're going to be homeless. Well, that's not going to happen. And so I'm shifting my business model as well. So a lot of the resources that I used to go after are just, they're not applicable right now. So you have to, adapt. Vincent, really quick, your question, you said regarding the down payment, do you have to return that money when they purchase? No, that's my money. That's mine. I own the house. So no probate either, right? Lisa, that's what you're asking me. Well, the banks are the courts are closed right now, so there's no way for me to get that information. I used to go to the courthouse and pull that information. So what I am doing is mailing my probate list, my existing one, because those houses still haven't sold yet. Whether or not they wanted to or not, there's still options. Good questions, everybody. All right, any other questions out there? No? Oh, what about the new book? The new book is done. The new book was supposed to be put on. It was supposed to be put on Amazon today on Kindle and also so you could buy it, but that didn't happen. just because I was dealing with the seller who backed out and then trying to remarket that house. But I should get it out there. But yeah, the book is finished. Tell you about it. Well, let me actually show you the book here. This is the book. Dun, 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 dun. All right, so I should be able to show you this. So, there we go. So this is the book here. It's Trouble Selling Your House: 7 House Selling Strategies to Get Your House Sold Fast. So this will be my third book, and it'll be a #1 bestseller again. And no, Jamie, I don't buy at auction. I buy everything before auction. Auction is in my opinion, a lazy investor's way to find deals. You don't know how to find a deal, so you wait till it goes to auction and hopefully you get it for a good price. I buy everything at a discount way before it goes to auction. Plus, you have to have proof of funds, and I'm all about taking over people's debt, not paying it off. And so you got to go to auction. You actually got to pay off that debt. So anyway, when I started this book last November, I never anticipated that this would be the selling environment that I was in, or the buying environment, if you will. So Trouble Selling Your House. This book just cues people right up to why they would want to have me come take over their payments for them. So this is this is my magnus opus, I think is how you say it. But anyway, let me see if I can. I have some. I thought I had the finished product. There's the EPUB. There we go. Let me see if I can do this. So, stop sharing, and then I'm gonna do new share. So yeah, this is the actual book here. Let me see if I can blow it up. Dun, 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 dun. Yeah, so Trouble Selling Your House by me. And here's the introduction. I'll just read this little part for you guys. So sometimes you just don't have the time or patience to wait for an answer. You want it now, and that's all that matters in that moment. When it comes to selling your house, you want it done fast. So waiting for it to sell can be so excruciating. I know for some of you, getting the nuts and bolts of this book can be a challenge if you're not a detail-oriented type of person. So I'll give it to you here, and then if you're wanting to put some more of the pieces together, you can come back and read the rest of the story. To sell fast, cut the price until it sells. Oh, it's an error. Look at that error. I never even saw that. This should be 2. Oh, what a shame. I need to go back to this guy. It's probably my fault. I don't know what happened. But anyway, you saw it here first. So to sell fast, you cut the price until it sells. And then number 2 is what it should be. Open up the house to creative financing options. For those type A types that just want the bottom line, skip to chapter 13. But I must warn you that if you skip to the end, you run the risk of missing out on the why this option is the best because you've missed the backstory. Either way, you're welcome, Ryan. So, and then I have testimonials. These are families that we've helped over the years, you know, with their homes. So, anyway, how embarrassing! So much for my editor catching that piece there. So
I love it, though. That's a great way to introduce the book.
Well, thank you. I appreciate that, Amy.
You caught my interest, and it's like, I want to read that book.
Definitely. I'll have to get you a copy once I fix it here.
That'd be awesome.
Yeah. So, well, thank you. All right. Let's see. We got some chats going on here. Sorry to ask again, do you use lawyers or title company? It depends on your state, Vincent. You're in California, you're going to use a title company. How is it relevant to what's happening right now in the market? How is what relevant, Lisa? What is the best avenues to take when starting? Okay, Casey, I'll get to that. But so basically if you're just getting started, you want to find properties, man, find the deals, but you need to know your numbers. You need to know. So if I were just getting started, so let me take this all back. If I were just getting started, I need to know who my buyer is. When I first got started, I found my buyer. I knew who my buyer was that had the money. Like, for example, I have a list of buyers right now that don't want that Washington house. The house is on Washington Avenue. They want another house, but they have down payment. So I have a list of buyers that all have down payment. So sometimes I rarely ever have to market my houses on the open market, like on the MLS, or not MLS, excuse me, on Craigslist or on Facebook Marketplace, because I already know what my buyer is looking for. So I basically go to my list and go, oh, I got a 3-bedroom, 2-bath in this area of town. These people over here, they want that side of town. And so I'm basically shopping for them. So if you're just getting started, I would start networking. I would network with buyers, real legitimate buyers, not other wholesalers, but people that are actually buying. And if you don't know where they're at, go to the auctions. They're there. I call them lazy investors because, again, they're not looking to go out there and do the trench work. They're individuals so in investing, you have people that have time and you have people that have money. Rarely will you find someone that have both. If they have the time and the money, they're going to favor one or the other. For me, when I first got started, I had all the time in the world, but I didn't have the money. So what did I do? I went after it and I found someone that had the money. That was Randy. Randy didn't have the time. He was in the middle of rehabbing a bunch of houses. And I said, well, what are you looking for? And he says, he gave me his criteria. Guess what? I went shopping for Randy because I now knew how to buy. I had his MO. And so that's what I would do. Is I'd find buyers and then just bring them properties. And that's how I would get started. Let's see what else we have going on here. What other questions? Definitely a journey, Randy. Definitely a journey. How about the auction? Have you ever tried to circumvent the auction process? I'm not quite sure what you mean by circumvent, but I buy properties all the time before they actually go to auction. I've actually bought properties the day of. And when I say buy, I've taken over the debt on those properties and I've reinstated those loans and brought them current, and now I own that asset, and away I go with taking over those monthly payments. But yeah, I've done that the day of in some cases. So and I don't know if that's what you mean by circumvent, but once it hits the auction and I don't have the funds in, and there's nothing I can do at that point. Casey says, I think the way it is worded is great. It fits the sarcasm, and it's like a choice, either or. Thank you. Oh, my book. So Lisa, your question was, where are you at? How is it relevant to what's happening right now in the market? Because houses are not getting sold. As you're seeing, so here's the thing. You're having houses out there that are having to, I showed you all the price drops earlier. Now, the whole point of showing you the price drops is you don't have to drop the price. Let's go back to this real quick. Let's see how do we do this. Where did we get at? That's right. There we go. So to your point here, Lisa, is if you want to sell your house fast, so basically if you have to sell, you cut the price, which is why you have those price drops, or you open it up to create a financing option. So as we talked about these houses, I wasn't dropping the sales price of the house. In fact, in some cases, I'm actually increasing the sales price. Let me actually show you the actual ad itself so you get an idea here. I'm driving this sales price through the financing options. Let me show this to you, Lisa, and you'll see how this makes sense. So I should be able to read. Here it is. So it's the whole listing here, and what I do is it says right here, it says I don't know if you guys can see this, and I'm gonna blow it up. So it says we have financing options for you. Best option $259,900, down payment $25,990. So this you can see is 10%. Monthly payment $1,800. The flexible option, it went up 10 grand here, but we reduced the down payment a little bit more than 10 grand, but monthly payment remained the same. The affordable option, we've increased this 20 grand, but we dropped the down payment significantly. Again, same monthly payment. So the challenge is, instead of we're doing the opposite here. Instead of dropping our price, we're actually increasing our price. And this option right here is, I have a lot of people that want this option and that are okay paying $1,800 a month. The problem with this is the partnership that I have, they're pushing for a higher down payment. They want to get rid of some of the private debt that they have underlying this mortgage. There's not just one person, but there's multiple people, and that's the reason for them to holding off right now. But I think in the end, we're probably going to end up taking one of these two different ones. But again, creative options allow for them to sell it at a higher price, and so that's what this book. I think this book is perfectly poised to do very well. In fact, I've toyed with the idea of creating actually a course specifically to real estate agents. Rather than having them drop prices, I want to teach them, hey, there's some other ways out there that you may not have heard or learned about when you went through and took your license, just because it was something that was, especially in the last, last decade, last 10 years from the run up from 2008 to where we're at today, where it's just in an upswing market. You're not going to have many creative options out there. But if you go back to brokers and realtors that were back in the, back in the day in the late 80s or late 70s, early 80s, this is very common, especially if they're not investors. If they're investor agents, they're very familiar with these types of terms. But if they're just your everyday real estate agent out there, then these are new terms for them, new creative ways of getting a house sold. And so I've actually thought about packaging something and sharing that with real estate agents. But that's something it's in the works there. All right, so let's go back to the chat here. See what else we got going on. Thank you. You're very welcome. Yes, thanks. Melissa. Hey, welcome, Melissa. I'm looking forward to some of your cold calling tips. Please share. Can you elaborate? Who are you cold calling? Are you cold calling agents? Are you cold calling lawyers for probate deals? Are you cold calling homeowners? Go ahead and put in the chat what you're looking at. Vincent, do you always put the prices in your advertising? Yes, I do. Great question. I do not want to be bombarded with phone calls after phone call after phone call, only to be asked, what's the monthly payment? What's the price? How much are you asking? Only to be, oh, I can't afford that. Sorry, thanks. My time is way too valuable. I talked about this, time and money. To me, time is very important to me. I would rather pay somebody, or in this particular case, give them the information so that only the most qualified people are going to be calling me. I'm going to show you a little secret as well here. I put here, reasons not to buy. I'm actually trying to dissuade them from buying this property. Don't call me if you have a problem with it not having a garage. Don't call me if you have a problem being on a semi-busy street. Don't call me if you have a problem with it having extremely high ceilings. Don't call me if if you have problems with 2 stories. Don't call me if you don't have the down payment. So I'm creating these barriers to entry so that I'm repelling the person that isn't qualified and attracting the person who is qualified. So the people that call me, they've already read this, they already know. And one of the questions I ask them, say, great, thanks for calling. Which one of our 3 financing options are you most interested in? And then I listen. I'm looking for, of course, I'm looking for these guys right here. I want these guys. I'll take a flexible option and an affordable option all day long, of course. Now, this is not my, I should tell you one thing. On my properties that are solely mine, where I'm not like, leveraged like crazy on debt, my monthly payment also goes up. There was just no way that I could justify $1,900 on this option and $2,000 on this option. That's $500 above fair market rent in that area, and that just is it's unjustifiable. I believe the total monthly payment on this, I think, is like $1,789. It's like, it's $11 a month that they're making. So anyway, that's that. And this is stuff that I cover in my course. Vincent, this and a lot more depth on how to qualify and get the right buyer so that you're not, wasting your time with tire kickers and stuff like that. So, and there's ways to be doing that. So, all right. Casey, how do you take over the debt? I'm not sure I understand. So the way you take over the debt is you call up the mortgage company and said, I'm taking over the payments. Can you mail the payments to me? You actually don't say I'm taking over the payments. There's some forms that you fill out with the mortgage company, and they will mail you the monthly payment, and then you start making those payments. But what you're doing is you're buying the house, and the house comes with the debt. So another way of looking at it is, if you buy a house that has a tax lien, guess what? You bought the house, but it also came with a tax lien. Well, you're buying the house with the mortgage lien. It's the same thing. It still has to be paid, and so you have to pay it. How do I vet my buyers? Is that Randy or is that Amy? Actually, it doesn't matter who it is. I'll tell you.
There
If
you go.
Pay, you can stay. What was that?
It wasn't me, so.
Oh, it must be okay. It must be Amy. So Amy, I vet my buyers. If they can pay, they can stay. But of course, we look at their credit, we look at their debt to income ratio, we look at a lot of stuff there. I recommend, if you're not familiar with those things, I used to be a mortgage originator. Have a mortgage originator do that as well. Just you want to make sure you're putting people into you're setting them up for success and not failure. Cold calling tips on vacant or probate properties. I tell you what, I cold call people all the time. I cold called the guy today. I'm mainly texting though, because I get faster responses, but for whatever reason, he was ignoring my text for the last 2 days. Come to find out that it was a landline that I was texting. Sometimes my phone will tell me it's a landline, sometimes it doesn't, and that's actually what happened. And I know the guy. He's like, who's this? I'm like, this is Ryan Nickel. He's like, hey, Ryan, and this is so-and-so. I'm like, oh my gosh, how are you doing, man? So anyway, he tried to buy a house for me a while back, and I didn't end up doing it, but his son reached out to me, and his son wanted to know how to sell some property creatively. But anyway, so, I cold call him, but it's really simple. Melissa, when I call the person, I say, hey, this is Ryan. Sometimes I say Ryan, sometimes I don't. I ask him about the property. It's like, hey, hi, this is Ryan. I was wondering if the house at whatever address is still available. And I wait for them to tell me. And then I go, that's fantastic. I'm actually interested in buying that property. I've been looking at it for property in that area. What are your plans with it? And I just sit there and I listen. And that's pretty much it. I mean, it's vacant or it's a it's a probate. So I let them tell me what they need and what they want. And sometimes they are very, very forthright and they'll tell you everything. And sometimes they're just like, nope, not interested. Thanks. I had a guy, was it last, I don't think it was last week, it was probably a while back. It might have been 2 weeks ago. But he called and he was asking for me. He's like, I'm looking for Ryan Nickel. You calling me about my house. It's not for sale. It never was for sale, and it will never be for sale. It's my house. So I'm like, hey man, fair enough. The thing about it was he never left me the address, so I had no idea what his house address was. So I ended up texting him a few times, and he never got back to me. So finally, I called him back. His name was Randy, by the way. And so when I called him, very polite, very, very polite guy. He told me the address. And I took it off my mailing list, and that was it. So, all right. What other questions do we got going on here? Melissa, you mentioned your course. Is there another course you're offering sometime? Yeah, so I have my Skinny Deals course. I had a couple of people that didn't take it last year because the market didn't dictate it, but they reached out to me. I had Ron Mackey was one of them. If you guys know him from Finance America, he has a son in Florida. And he's like, my son really wants to do this. I want to help him. I think we can make a killing out in Florida. And I've had a few other people as well that said, hey, if you're ever going to do it again, because I sell the course as it is, but last summer versus this year right now, two different things. My marketing approach, my actual sit down with the seller's approach, my seller's presentation is completely changed. And the reason why it's completely changed is because the trust and credibility factor has completely evolved given the circumstance that's happening right now in the economy. So I've revamped the marketing aspect of it. I've revamped the seller's perspective of it. If you went through the program, I'm offering a discount for those that want to come back for an upgrade. A really, 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 really steep discount, like a no-brainer discount. For those of you that haven't gone through the program, then that's available. I'm testing the market right now to see if there's actually, if Ron and the handful of others that reached out, if that's the gist of it, or if there's actually more individuals that want access to that that training, because that's there too. So if you want to talk, we can talk more about that offline. Vincent, do you use servicing companies to handle all the payments and such? No, I do not. You can do that though. There are many of them that are out there. I can't vouch for any of them because I do it myself. Thanks for your time. See you next time. Thanks, Jamie. Hope you gain lots. 8 o'clock, guys. Do you help buyers with credit repair and qualifying for loans? Yes, I do. I don't personally do that. That's a lot of work. That's a lot of hand holding, but I refer them out to individuals that do. Those blinds are making some funky noises, aren't they? All right. So if there aren't any other questions, I'm going to go kiss my kids goodnight. Wish I had better lighting. Apologize for that, guys.
Oh, I see. Okay, Ryan.
How you do?
Thank you.
Witness protection program. Do I still split deals? Yes, I do, Vincent. It just depends on the deal, though. It has to make sense. Like, for example, the 2 that I showed you earlier, split those deals. Those are good deals. Thank you for this tonight. Hey, you're very welcome. I appreciate you, Lisa. When cold calling, do you worry about do not call list? No, I don't. Because I just don't. I'm not calling from a dialer. I'm not calling from a business. I'm calling for myself personally. I'm a consumer calling. I'm going to buy this house for my own personal portfolio. So those are the reasons why I don't worry about it. You may want to check into that and see if that covers you for your any liability that you may have. I can't remember, Melissa, if you're licensed or not, but those are things that you definitely want to take into consideration. Do you tell sellers that you are an investor? Vincent, I don't. Because 2 reasons. One, there's no need to. I'm interested in buying the house, and that's the truth. Whether it's, I take that back. No, actually, I never say, hey, hi, I'm an investor. I find that that's repulsive to individuals. Investors sometimes, for the most part, have a bad connotation in the marketplace. Oh, you're that guy that's going to try to lowball me. I've heard that before. Oh, you're that lowball investor. You're trying to get the best, you're trying to, take advantage of me here. And that's not the case. But I do tell this to people. I say, my wife is my partner. I say, my wife and I, yeah, we're looking for an investment property in that area. We want to add a rental to our retirement portfolio. I just leave it at that. They understand that. They never go, oh, really now? What kind of investor are you? The guy I called today, I cold called him today, the guy that had the landline that I was texting to. His first question was, did you read the ad? I'm like, I sure did, yeah. He goes, what kind of investor are you? So he knew, right, if I read the ad, that he knew that I was, because he said, investors call only. Cash only investors call. So by me admitting to have read the ad, he says, well, then what kind of investor are you? I'm a cash investor. And we talked about the property, and they told me all the deficiencies, and I said, no way, you can have it. Piece of garbage property. But he knew that going into it. He told me that. He's like, oh, you're probably not going to want this one. So, but anyway. How do I title myself? I'm a father. I'm a dad. I usually say I'm looking to buy a retirement home in that area, and looking to buy a home to, a rental home for our retirement, for my family's retirement. I'm a family guy. I'm a family guy first and foremost. I got 5 beautiful kids. I have a beautiful wife, and I lead with that. Sometimes I take my kids with me and I knock on the doors. So I'm door knocking. I have my kids with me. I'm a lot more approachable as a father looking for a home for his family than an investor out there with my business card in my hand trying to, shove it down some guy's throat. Not that that's what you'd be doing. So, cool. I like that. Thanks. When you started, how did you fund your first few deals to get started? Good question, Casey. Remember I talked about finding the buyer? It was the buyer who had the cash. So, in fact, that one, I had I did that one a little bit backwards. I had the property, but I didn't have the buyer. I advertised it, and the buyer showed up, and they had the down payment, and I used that down payment to fund everything else, to fund the closing, to pay for everything. So I used the buyer's money. And from that, I learned the lesson was to advertise for buyers. So once I had that one property, I built a massive buyers list. And then I just started finding other houses in the area that those buyers were interested in. Rule of thumb, you're always going to have more buyers than you are going to have houses. It's just, more buyers than sellers is just how it is. Did I find the buyers first? Yeah, I do now. Well, now I've built up enough buyers that, I can do this with. But I still always put the house on Craigslist and on Facebook Marketplace just because it still allows me to build even a bigger buyers list. So, and I don't know if the buyers that I have are going to actually fall in love with that particular property. Sometimes they do, sometimes they don't. So I'm always advertising for new buyers. Cool. Any other stragglers out there? Going once? I will be purchasing your program. Okay, fantastic. You don't even know the price yet, Vincent. But I love that. I love that mentality. That's awesome. I thank you so much for your time and look forward to working with you. I do too, Vincent. I wish you all the success in the world. This is such a great opportunity to be alive. I tell all my students, and I tell it to the guys out there I make these videos for on Bootstrap REI. If you're not a member of Bootstrap REI, go over there. There's some great content there. But guys, you're just one deal away from changing your entire financial future. That first deal that I got changed my life. I was broke. I literally was on food stamps and I was homeless. I was living in the back of a guy's office on the floor while my family was in California. I had driven cross country to Georgia, and I was struggling to find myself in real estate. And that first deal completely changed my life. It was a $15,000 check for 3 weeks worth of work. Now I had a mentor. That mentor really guided me and showed me the way, the path that I needed to go. And I also leaned upon his expertise to give me the confidence to get out there and go do what I was about to do, because I didn't have a clue what I was going to do, especially when it came to paperwork. And that one deal changed my life, changed my financial future forever. Here I am, 5 years later, and a beautiful portfolio, monthly cash flow, and able to live, sustain myself financially. I love it. So yeah, you're just one deal away from changing your entire financial future. I've seen that video. It was great. Awesome. Thanks, Casey. Very inspiring. Hey, thank you, Vincent. So yeah, guys, I believe in you. I believe in this stuff. This is the reason why I would take, an hour and a half away from my family to come out here and just to answer your guys' questions and share some of the things that I believe are coming. You also want to be smart. If you're going to be invested in the type of investments that I do, you definitely want to be smart in doing it. They're a great way to get started with no cash, no credit. But at the same time, it was also very scary for me. Those first couple of deals, I picked up a few really fast, and I still was on food stamps. I still was, struggling. I had cash in the bank, but I didn't have enough cash flow coming in to meet my monthly obligations. So the cash I had in the bank was coming down. It was dwindling down every month because I was, reaching into those reserves to fund my monthly expenditures. And there was a time where early on, one of those properties stopped paying. They stopped paying for 3 months, and it was extremely, extremely painful, financially and emotionally and mentally. I was under some extreme pressure and stress because this was that particular house was someone who I had bought the home from. He actually paid me money to buy his property. He paid me like $8,600, and with the promise that I would never let that property ever go into any kind of default, because he was military and he needed a security clearance in order to maintain his military status. And that was my obligation in taking that property, which is why it was an upside down property as well. It was upside down, so he paid for me to take it off his hands. But that was that moment. Those were some very, very, very difficult times for me, reaching in my pocket, knowing that I wasn't getting paid, but to make these mortgage payments for this guy. Everything worked out in the end, thank goodness. It did. But those are just some of the things that I wanted you to be aware of. going into this. So be careful. You know, you want to make sure that you're structuring yourself on your first couple of the deals. You want to make sure you get large down payments, and you can, and the monthly payment is way below, you know, fair market rent, in case, you know, God forbid, you know, you have to throw a renter in there because you can't get it sold or whatever, but you have a cushion that can carry you through that hardship. But I can almost guarantee you that you wouldn't have to throw a renter in there. These homes will get sold because, you know, someone would rather buy than rent if the monthly payment is within reason. I find that the hardest thing is trying to explain this to sellers. Vincent, that's why I wrote the book. You're going to go through my course, like you said. I'm going to give you 10 copies of that book. So everyone that goes through that course, they get those books. Yeah, you give the book to the seller and let the book do the heavy lifting. That's the whole reason why I bought that book, because yeah, for me to explain what's in 150 pages in, you know, a 10-minute conversation with someone, this doesn't work. Which is also why, because of the market, you know, transition that we're going from a seller's market into a buyer's market. You know, sellers before just like, they put that sign in the yard and they let people like fight over their house. Now, you know, in some pockets you're going to see that. In some areas you're still going to see that this price, you know, elasticity is going to maintain there. Other areas you're going to have some price erosion. And because of that price erosion, you're going to have to be able to have a conversation with these sellers and let them know, hey, we've transitioned from a seller's market to a buyer's market. The buyer's the one who holds the keys, especially if they can get qualified. If they can't get qualified, then you're out of luck now. And that's the real issue. And so having these conversations, that book does a lot of the heavy lifting. But again, the seller's presentation is what really primes them to accept you as the expert, as a person that can help solve their problem. Again, we're not going to try to get everybody. You're just going to go after the ones that need it, the ones that desperately need to sell. So there are the want to sellers, and then there are the need to sellers, and you're looking for the need to sellers. And the need to sellers aren't always the obvious ones, like, oh, they're you know, divorced, or they're bankrupt, or they're in foreclosure. It could be a job transfer. It could be an illness. It could be something that's, you know, hidden behind, you know, certain things. I mean, Randy and I, we bought a house, and this guy wasn't distressed at all, but his grandchildren had moved away, like across the country, like from California to Michigan. And he took a huge bath on the property. He didn't care. He's like, I want to be with my grandkids. He just let the property, you know, he didn't let it go, but he came down, I think, about $40,000, $50,000 off his price originally. And what a great deal that was.
It was a good deal.
That was. You know what I'm talking about too, don't you?
Oh yeah. Can't complain on that one.
Mm-hmm. So, thank you for your time. I really want to get started. I found some great properties. Fantastic, Casey. I'm glad to hear that. I just need to learn more. Yes. Vincent, I find that the hardest thing is trying to explain. Okay, sellers, yeah. How do you advertise online for sellers to try to attract sellers? I don't actually. That's something that I haven't done, and I just haven't done it. I haven't had the need to. I'm not very good at doing that. I'm probably not a good guy to ask if it works or not. I do know people that do online ads, websites and Facebook ads and Google ads, but these are buyers that are looking for, or they're attracting sellers that want all cash deals, not sellers that you need to convert. So this is what I tell people is that seller finance transactions are created, they're made, they're not found. Rarely ever will you find someone that says, hey, come take over my payments for me. Because this is a form of debt relief. And so in order to satisfy someone's problem, you have to figure out what that problem actually is. You have to dig deep into it and realize, this house is causing this pain. Let me give you some relief here. Let me take this debt off your shoulders. Let me give you some debt relief and allow you to, you know, breathe and then move on with your life. And so you really have to dive into those conversations with those sellers. And that's really what the seller's presentation is all about, is, you know, from your first phone call to when you're sitting face to face with them. Now, again, with social distancing, I don't know exactly how that's going to work, but there has to be some kind of interaction, whether we're doing, you know, face to face like this, you know, through Zoom or through FaceTime or whatever it is. There needs to be an interaction. Over the phone, it can be done, But you're just getting one aspect of the communication process. You're just getting the auditory. There's visual. There's a kinesthetic feel. There's a lot of cues that go on to when you're talking to someone face to face that you won't be able to pick up on necessarily over the phone. But again, I don't want to dive too deep into that. I can nerd out on these topics, but this is really what happens when you're talking to somebody. So how do you online? How do you track sellers? So I guess you don't do the bandit signs, I buy houses for cash. I do not, no. I tried that early on. Again, that's just my style. It might work for you. Try it. What I would say is try it. You have nothing to lose other than, time and energy and money, a little bit of money to get out there and do it. Maybe a few fines if you get caught. If you do it, I would definitely suggest to have a Google Voice number that, masks your own personal number so it's not going right to your cell. Or say it's not your personal cell number. You can have it go directed to your cell, but you don't want to have your personal number out there. Because code enforcement, they'll fine you for that stuff. It's, it's considered advertising without a permit. But, it may be worth it just to do a market test. Or if you're going to do it on a Friday night, put them up Friday night when the code enforcement are off, and then pick them up, Sunday evening before they get back out to work on Monday. That's one way to test it. Or, give a guy, say, hey, I'll pay your utility bill for a month, $100 or whatever. You let me put a sign in your yard. They can't do anything about that. It's on private property. So, there are a lot of ways to test that strategy. I have found, though, as I've gone out on those phone calls, because I did get some phone calls, guys were just price shopping. They weren't in pain. They weren't hurting really, really bad. But I will say that guy that I just told you about that his grandkids moved away, he called them my truck sign. So I don't want to throw it out completely that kind of advertising doesn't work, because I did get a guy that called on the truck sign. So
You've had a few of those, Ryan. I've
had two, Randy. We've had two. It's panned out. I've had a couple others just call just for whatever reasons, but the two are very, very successful for us.
Yeah, two of them were great deals.
They were. It's actually funny. I was talking to my wife about that today. I was like, I'm gonna start driving that truck around now because there's a lot less people on the road, and it'll probably catch the eyes because of the advertisement versus just blending in with all the other cars out there.
Where's it hiding right now, Ryan?
It's sitting in my driveway.
Oh,
yeah.
All right. Yeah, because I haven't seen it over there at the ice cream.
Yeah, we were advertising it from the property we bought, but since no one's driving, I decided to move it. I didn't want to get vandalized. What else we got? That's it. Okay, so any other questions out there, guys? Going once? Going twice?
All right, Ryan, round of applause.
Oh, there it is. Thanks again for the advice. All right, cool.
Thank you, Roland, Randy.
All right, take care.
Thanks, Randy. Thank you,
All right.
everybody. This is recorded, so I'll go ahead and post it on Facebook, on Bootstrap REI, and it'll also be posted in the Bootstrap REI YouTube place. You guys can watch it there.
Sounds good. Take care, Ryan. Have a good night.
Everybody, take care.
Awesome. Thanks.
All right, bye.